Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. We're going to be looking at risk analysis. So it's a metric that tries to determine what level of risk you're taking on by investing in Bitcoin at various times during the market cycle. So if you guys like the content, please go ahead and subscribe to the channel. It'll mean a lot to me. And then also check out the Telegram channel, which you can see a link to in the description below, as well as see here in the bottom right-hand corner of the screen. We're going on 2,400 members, and we have a lot of good chats in there. So let's go ahead and push forward. Again, if you haven't seen all the videos, this is the new official logo of my channel. So let me know what you guys think in the description below. Again, it was made by Rhett in the Telegram chat, so shout out to him again. And I'll link his channel as well in the description. So let's go ahead and talk about Bitcoin risk analysis. So if you're not familiar with this metric, the general idea is how can you buy Bitcoin to lower your overall risk? And the idea is, we want to take various metrics to try to identify speculative bubbles, but also try to identify times when historically it's a great time to get in. Now, at first I made this metric, but there was a key, there was something obviously missing from it, which I fixed a long time ago, and that was it did not account for diminishing returns and lengthening cycles. But obviously it does now, and it has for many, many months. And I think this is, a good tool to use to try to identify when is a good time to get in. I think it accounts for macro level volatility and also accounts for diminishing returns. So obviously time will tell how well it works out, but this is at least what I'm using right now. It's not financial advice. It's just a metric that I optimize to fit historical data and to try to identify key time frames to get into the market. So what we have here is on the y-axis, we have the price of Bitcoin on a logarithmic scale. On the x-axis, we have time. And on this color here is a color-coded risk dimension. So you can think of it as going from 0 to 1. If it's blue, dark blue, it's a low risk. If it's dark red, it's a high risk. So pretty simple, fairly straightforward. Again, note that for people unfamiliar with logarithmic scales, I get a ton of messages saying, this can't be the price of Bitcoin, it looks nothing like it. Well, it's because it's on a log scale. So going from here to here is 10x, and here to here is 10x, and then here to here is 10x. So just try to think about that for a few minutes and try to get that to click so that the rest of the content is useful. So when we have capitulation phases, we get into this dark blue region, which historically, if you can come up with the courage to purchase Bitcoin at that time, then it's only I don't want to say it's just a matter of time before you're profitable, because you could basically say that regardless of where you buy Bitcoin, assuming you didn't buy up here at the prior market cycle. So we're still waiting to get above that point. But for the entire history of Bitcoin, going back to 2009, you mostly would have been profitable. And that goes along with, the saying, it's not timing the market, it's time in the market. But with crypto, timing the market is also very important, because if you're buying up here, you have to wait 3 to 4 years sometimes to see your ROI just get back to break even. Whereas if you're buying down here, by the time you're at the point where you would have been break even, you're already up, maybe almost an order of magnitude by that point. So this can make a huge difference in your expected returns depending on when you get in. You're either the smart money coming in when there's a lull in the market, when a lot of people are fearful, when the price is it's still potentially trying to find a bottom. We're not sure where the bottom is. Or you're dumb money speculating, coming in at the top when your grandmother's buying Bitcoin, and you're thinking, oh well, let me go ahead and come in, and I'll just hold it for a couple of years, and certainly it'll be up a lot by that point, given how it's likely going to $1 million or something. So that's what you call dumb money, and believe me, I've been in crypto long enough to see this time and time again. Dumb money will always return to the table. Now, you could argue that if Bitcoin were to go to $3,000 in a week, then people buying today could theoretically be considered dumb money. I don't really consider that to be the case. What I'm doing now is dynamically dollar cost averaging. We don't know where the bottom is. If we go lower, then great, because we can get more. If we go higher, then we're going to reduce our contributions. Not financial advice. We're going to reduce our contributions so that our overall risk level is lower. So you can see down here the risk level is very low. Good time to buy, and it's optimized to predict these peaks. So it turns dark red. If you're curious if I verified the model, like if I validated it by putting in data, I put in what I consider to be a reasonable set of data going out to peaking in 2023, 2024, 2022. I've looked at all of them. It seems to predict reasonable levels of risk in that scenario, or in each scenario. So I do have a video for that if you go back and look on the YouTube channel, where I think I put it as peaking in like this maybe 2023 or December of 2022. I can't remember. But the idea is, looking back at this market cycle, if you were buying at this point and 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 maybe this point and this point here, if you're buying at those points, are you going to be mad at yourself when you're up in this region selling? Okay? Are you going to say, oh man, why did I buy here? I should have just purchased everything down here. Well, no one can realistically expect to time the bottom. It's just not a reasonable expectation to have, and you need to get that thinking out of your head. Because the sooner you can, you just say, you know what, I didn't know where the bottom was, and I dollar cost averaged my way in when I thought that it was a good time to get into the market. It might go down further, it might not, but historically, when we're at these levels or around these levels, then it is a historically good time to start getting into the market. And the funny thing is when people are, when the risk level is up here, it hit like 0.7 or so, people were saying, oh man, I wish the price would go back down to 3,000 or 4,000. I wish I could just get in at that price. But then a lot of times when that happens, people don't pull the trigger on buying. They watch it, and they think when it gets to 5,000, they think it's going to to 2,000 or 1,000, and then they watch it go to $3,800, and they're like, oh yeah, told you so. And then the price just shoots back up to $5,500 in like 5 minutes. So this happens time and time again. When the risk level gets between 0 and 0.2, it doesn't usually stay there for very long. That's why I say it's historically a good option to have buys in placed at the 200-week moving average, at the 300-week moving average, just in case we get to that level and you're at work. Well, if you're working at home, I guess, and you just don't have time to follow the market. And typically, I try to set it a little bit higher than those levels. So I know I've been kind of rambling a little bit here, but I'm just trying to give you an update. So the current risk of Bitcoin is 0.3. It's like 0.307 or something like that. When the price dropped to $3,800, the instantaneous risk was 0.13. The reason you don't see that shown on this graph where it gets that very dark blue region is because this only accounts for daily data. It does not count for those wicks that take just a few seconds to make. But that risk level was a great risk level, and the people that bought at the 300-week moving average are already up, a significant amount. I mean, you would have been buying at 3,800, so you're not quite up 100%, but you are up a significant percentage. So it's all a matter of, when the time gets hard and when it looks like Bitcoin is just crashing and crashing and crashing forever, do you have the courage to start dollar cost averaging your way in? And with the global pandemic, obviously people do tend to liquidate high risk assets. It's possible that the 50% drop in one day that we saw is directly linked to that. I'm not going to discount that possibility, but at the same time, if you're looking at this in terms of lengthening cycles, which I feel like I've laid out the evidence pretty clear for, if you look at the prior videos, then what Bitcoin does in 2020 is irrelevant. What it does in maybe early 2021 is completely irrelevant to what we were expecting down the line for the couple years after that. Because right now, what my goal and what I feel like your goal should be would just be to accumulate as much Bitcoin for as little as you can. And if you can do that, then come 2022, 2023, maybe even 2024, you're going to be sitting pretty, and you're going to have the luxury to sell Bitcoin likely at a much higher price. Now, obviously, historical patterns or historical results don't, guarantee future returns. We know that. I've said that before. The point is we're just using historical data to try to inform our decisions. Clearly, there's an underlying risk with cryptocurrency that is outside of this risk, in that we don't fully know what's going to happen. But if you are a big proponent of Bitcoin and you really do think that it is going to experience a bull run, you're just not sure when it's going to happen, then I would say, like, if you're not buying, or at least if you don't have a plan of how you're going to buy and when you're going to buy, what are you doing? Are you waiting for it to go to $1,000? And maybe it would. I don't think it will. I think going to 1,000 would completely break the market structure that it's built up. But what are you going to do if it doesn't? Like, what are you going to do if the price never gets to that level? So just think about that. So we're going to remove the color-coded risk dimension and then just plot the risk on the secondary y-axis so you can see it better numerically. So you can see how each peak here is peaking around 0.9 to 1. So that's purposeful, so to try to identify the next time we want to get out of the market. I've talked about dynamically dollar cost averaging your sells as well as your buys. So, for a moderate risk taker, to buy below a risk of 0.5 and to sell above a risk of 0.5. And that would be dynamically. So, at 0.5 to 0.6, maybe you're selling 1/15 of your Bitcoin. Maybe between 0.6 and 0.7, you're selling 2/15. 0.7 and 0.8, 3/15, and so on and so forth. And then same thing with buying. You just figure out what your base level is, the lowest you would want to put in at a given time interval. And if it's, say, $100, then when the risk is between 0.4 and 0.5, you're only putting in 100. When it's between 0.3 and 0.4, you're putting in maybe 200 or some other multiple. When it's 0 to 0.1, you're putting in 500. That way, if it does go down, you can continue to get your risk lower at a much quicker rate than if you were just statically dollar cost averaging. But it requires patience and diligence. And there are some people out there that'll just say, well, I just want to put it all in now, and that's fine if you want to do that. But if you're trying to manage investments in say cryptocurrency and traditional markets and and whatever it might be, the list would go on endlessly essentially. Then it doesn't necessarily make the most sense to just go all in on something at a random price point in time. So here it is numerically. You can see we've come down to the 0.2 level. Remember, we actually did come down to 0.13 if you were to take into account minute data. But still, even here, the risk level is right around that 0.3 regime. If we come down lower, I would just consider that yet another opportunity. Here's just for fun, just to plot the risk versus the price of Bitcoin. And you can see basically, as price goes up on a log scale, we have price going up, risk going up, it crashes, and then price goes back up, but at a lower risk level than it was before, crashes, and then it did a little loop where price came down, risk went to the risk went down, price went down, and then the next time price started increasing, it was at a lower risk level, went back up to a speculative bubble. Now we're coming back down and performing those same loops. So eventually we would expect this to break out into another speculative bubble phase, probably peaking somewhere around 6 figures, sometime in 2023, plus or minus 6 months or so. Here the same graph is, but I just inverted the axes, since some people prefer to look at Bitcoin price on the y-axis as opposed to the x-axis. So again, check out this Telegram channel if you want to discuss these charts. I also want to mention a couple other things. So the first thing is, many of you know that I write monthly reports, Bitcoin letters, Ethereum letters, altcoin letters for people that support the channel. After polling a lot of the people that support me, it turns out that people would prefer to have weekly newsletters as opposed to monthly reports. So I'm going to focus on getting these weekly newsletters out that are going to be a little bit more concise. They're only going to be maybe 5 to 6 pages, but I'm going to publish them weekly. The plan is to publish them every every Sunday night. So I just released the first one. It's called the Quantitative Investor. I'm not necessarily married to the name, but I'm just trying it out. So if you wanna check this out, they're about 5 pages, or this first one's about 5 pages. So if you want to go through some of the different the risk metrics for, I think in this report I did Bitcoin, Ethereum, Litecoin, and XRP. And we also talked about logarithmic regression. We talked about some other graphs. I even show some plots for COVID-19 because of the pandemic, and trying to get an idea: are we leveling off? Are we not? What countries are not leveling off? What countries are? Stuff like that. And then we also looked at just a few other things that you can check out in terms of, like, say, undervaluation, overvaluation of the total cryptocurrency market cap. So, some people don't want to join the Patreon channel. I get that. If you just want, if all your goal is to just get an article written up, delivered to your inbox every Sunday night, so then Monday morning it's there ready for you to read it and see kind of what's going on, then you can either check out the Patreon channel and just sign up for the first tier and you'll get the report. If you don't want to deal with Patreon, you can also sign up using paying with cryptocurrency. And if you want to do that, then just check out the description below and you can actually get a decent percentage off, because I'm only going to do it for like 6 months or a year. I'm not going to deal with month-to-month manual crypto payments. So if you want to do that, you can get a decent percentage off, and then you'll get a report every Monday with analysis written by me, and I hope you guys enjoy it. So check out the description again below if you wanna see how you can sign up to receive a weekly subscription of this report. So I'll let you guys check that out. And then finally, I just want to bring up this chart one more time. We talked about the 20-week, the 100-week, and the 200-week, and how likely after bouncing off the 200-week, our next stop was the 100-week. You can see we basically filled that in at this point. The candle has not actually closed up at the 100-week, but we have had a wick to that point, which did hold as resistance, which we thought it would. 7,100 or thereabout, yes, 7,104 is. I mean, this is one place. Obviously, the 100 week is going to vary depending on what exchange you're using, but the 100 week I do think will provide some level of resistance, and if we can break it, then watch out for the 20 week, because if we can get above the 20 week, then a lot of confidence is going to come back. I don't think we're about to imminently get above the 20 week. I think this is going to be a drawn out process. I see 2020 being a lot like 2019, and that is the time to accumulate. Even 2021, early 2021 is probably going to be a good time to accumulate. This is not the year that we're likely going to see all-time highs. It's just not. And I know a lot of people don't like to hear that, and I get a lot of flack for saying that. But if you're smart money, or let's say, if you're dumb money, all you want to hear is Bitcoin is going to $100,000 this year, or it's going to $1 million. That's dumb money. That's people that are just throwing their money around without actually thinking about, what does the math say? Do the patterns suggest that Bitcoin is going to go to $100,000 in 2020? No, it does not. Nothing about the patterns suggests that that is the case. And so I think this is where the difference becomes smart money versus dumb money. Smart money is getting in slowly into the market. They're developing their positions so that they're ready for the market once it does take off. Okay, that's the idea. So look out for the 20 week. Until Bitcoin gets above the 20 week, as we've mentioned before, and as we've seen happen, Bitcoin dominance will continue to likely rise. So there's, and I've said this, the minute we broke the 20 week, you should probably consolidate your positions. There's no reason to have positions in 10 or 20 altcoins when 9 times out of 10, I think, most likely, you would have just been better off holding Bitcoin. Because when we're below the 20 week, altcoin confidence is basically out the window. When we're above the 20 week, it's altcoin season and everyone loves altcoins again. But for now, Bitcoin, stablecoins, maybe some Ethereum is likely where you're going to want to mostly be. That's not to say if you have a favorite project you want to support, maybe one or two, it's not necessarily a bad thing. But if you're throwing money at 100 different altcoins hoping to strike gold, then your opportunity cost in not just putting it in Bitcoin is really high. because if you're throwing money at 100 different altcoins and only one of them, even if one of them does 100x and the other ones go to zero, well, I mean, think about all the opportunity cost you had of just not putting the entire thing into Bitcoin in the first place. So just consider that, and it's the time of the market cycle. If we were above the 20-week and Bitcoin was going to its all-time high, then altcoin sentiment would be different. We're not at that stage right now. We're below the 20-week. We're not even above the 100-week right now at $7,100. So we have a ways to go. This is not a game to just rush in. It's a game to, time out your entries and to be okay with it. Just say, okay, you know what? I'm going to buy it at this price point because I think it is a fair value given the macro level view of Bitcoin. Okay, and we've talked about this many times before, and even just looking at like focusing on, say, the moving averages rather than focusing on the price. I mean, just looking at these long-term moving averages, increasing going into the halving, reaching a peak, decreasing, stabilizing around the halving, and then starting to increase again. We're basically just repeating, but you can see that the peak is getting further to the right after the halving. So that's why eventually I think we're going to bleed into another halving in a single market cycle. I'm not saying it has to happen this market cycle. It very well might not, but in the next market cycle, say Bitcoin goes to $100,000 and then retraces to $40,000, and at least the market cycle after that, I would expect it to have two halvings. Let me know what you guys think about that in the comments below. Again, check out the newsletter if you wanna sign up for that. If you want to pay with crypto as opposed to joining Patreon, you can do that. And if you want to pay for like a year up front, you'll get a significant percentage off, and then you'll just get a weekly newsletter every Monday for 52 weeks. If you're just here for the free content, like I know many people are, which is completely fine, I get that, then at least subscribe to the channel and check out this link here, this Telegram channel in the description below. If Telegram's not your thing, you can also check out, we have a Discord channel as well. But I think that'll wrap it up for this video. I hope you guys enjoyed the video on the risk analysis of Bitcoin, and I will talk to you guys next time. Bye.